Now a new trading week is preparing to kick off right behind me here at the New York Stock Exchange, and investors, they're wondering whether or not the good times will continue to roll, because last week, despite several key tech companies reporting weak earnings and seeing large intraday slides like Meta, Alphabet, and Amazon, the U.S. market still managed to spike on consumer balance sheet data, meeting expectations, and rising oil prices lifting energy stocks. The positives far outweighing the negatives and leading the way for the indices to end the week higher, marking the fourth positive week in a row for the Dow Jones, up about 5%, the S&P, the Nasdaq up 2%, 1.5% respectively. But now it's time to look ahead. Will we see a continuation of the gains, or will the bears return to the markets, especially with a new month ahead? Let's now take a look to see what will likely move the markets in the week ahead. Now we kick off the week in China with the Chinese October non-manufacturing PMI read on the docket. Expectations call for a read of 51.9. Then it's off to Germany, where we will see the release of September German retail sales figures. They're expected to come in at negative 0.4%. And staying in Europe, the EU preliminary third quarter GDP report awaits. Expectations call for a read of 0.2% quarter over quarter, 2.1% year over year. Tuesday kicks off the new month of November, and it begins down under with the Australian RBA interest rate decision. That rate is expected to rise from 2.6% to 2.85%. That will then be followed by US ISM manufacturing PMI for the month of October, that of which is expected at 50. Wednesday, meanwhile, begins in New Zealand, where the country's third quarter unemployment rate awaits. Expectations call for a read of 3.2%. Then it's off to Germany, where September imports, exports, as well as the October unemployment report awaits. German unemployment expected to remain unchanged, 5.5%. Then it's off to the United States, where we see the release of U.S. ADP private payrolls, that of which is expected to come in at 198,000 for the month of October, but all eyes will also be on the U.S. Federal Reserve's rate decision, expected to rise another 0.75 percentage point to 4%. And the rate decisions, they carry over into Thursday, with the Bank of England's rate decision due out. Expectations call for a rise as well of 0.75 percentage point to 3%. Well, right here in the United States, we have weekly jobless claims as well as third quarter preliminary non-farm productivity. That's expected 0.7%. And we closed out the week on Friday with the highly anticipated U.S. employment report for the month of October. Non-farm payrolls expected 220,000. The unemployment rate expected at 3.6%. And once again, keep an eye on those earnings reports, which last week played a significant role in moving the markets. And until next week, technically next month, live from the New York Stock Exchange, I'm James Sweeney reporting for ICM.